Hi, welcome to the video, and today we are talking about this Marketwatch opinion piece that states 5 reasons why 2021 just might be the year GM's stock price stands up to Tesla. If we are just talking about GM's stock price being competitive to Tesla's, I could see a case, even though I think it's highly unlikely. My problem with this article is that when most people read this headline, they will assume this article is talking about GM the company competing with Tesla the company, and that's where I would disagree with. I don't think GM has a very good chance of standing up to Tesla, but let's dive into this article and I'll give you my thoughts. In 2009, General Motors recorded the largest industrial bankruptcy in history with over $170 billion in liabilities, but it emerged from Chapter 11 less than 2 months later and then quickly re-IPO'd in 2010. Unfortunately, General Motors returned to public markets just a few months after a little electric vehicle company called Tesla listed its stock, and ever since, investors have largely written off the once iconic automaker and piled into its more dynamic competitor instead. For the record, most people were writing off Tesla for a majority of this period. Only recently, I would say this year, that most investors have finally come on board to Tesla. Before and after the bankruptcy, GM was still considered a fairly powerful player in the automaker market. They still sell a lot of cars. Back to the article, since January 1st, 2011, GM's share price has only risen about 50%, compared with more than 200% gains from the broader S&P 500 in the same period. As for Tesla, the upstart EV manufacturer has delivered a jaw-dropping, my jaw literally just dropped and I couldn't even pronounce the word, gains of 15,000% when you adjust for its recent split. Even more impressive, Tesla has a market capitalization that's now 10 times that of GM. It's difficult to see these numbers and think GM will ever be worth your attention as an investor. However, the company has notched some significant wins lately that could mean things are turning around. Here's why General Motors may have a chance of holding its own in the coming months. And here they've listed 5 major reasons. I will go over them one at a time. Number 1 is recent momentum. Believe it or not, GM has tacked on very impressive gains over the last year or so. Shares are up more than 50% compared with pre-pandemic levels from early 2020 and have more than tripled from their March lows. The momentum isn't slowing either, with a short-term uptrend of 35% in the last 30 days. Those admittedly aren't Tesla-like numbers, but they are significantly better than the broader market's performance. Here we can take a look at GM stock over the past 6 months and the past year. It indeed has been going up quite a lot. In March, its lows were almost nearly about $15 and now highs at $56. It's actually doing very well. The reason it's doing so well is because of Mary Barra. She's done a great job in PR, giving people faith that they are on board with the EV future. They're pushing out a lot of cars, giving out a lot of renderings. They're even pushing out flying vehicles. They're just throwing everything at the wall. And this is all great news, but until I see something, until I see a functional car that has the stats that they are touting, it's hard to get too excited. It just feels like a very good marketing campaign so far. We've not seen anything regarding execution, but for now, their intention, their stated mission is definitely driving the stock price up. Back to the article, the number 2 reason why this author believes GM's stock price can stand up to Tesla is Cruise partnership. And this is an exciting one. A big reason for the most recent gains in GM stock is news of a partnership with tech powerhouse Microsoft on the automaker's autonomous vehicle project known as Cruise. Specifically, Microsoft has joined a $2 billion funding round and pledged to provide software, hardware, and cloud computing expertise to the project, along with deep relationships with suppliers to facilitate the actual production and manufacturing of self-driving cars at scale. This has a lot of Tesla-like potential, as it points to a clear plan to commercialize the technology in a mass market instead of just seeing autonomous vehicles as a niche project. Regardless of how the field shakes out in the long term, investors clearly like the fact that GM is at the front of the pack at this moment. This is exciting. Having a partner like Microsoft, that's a big deal. I think the stock justifiably will respond positively to that, but saying GM is at the front of the pack is just categorically false. This doesn't pass the smell test. How are you going to partner with somebody and instantly become the front of the pack? Number 3 point for GM, according to the article, is EV evolution. The Chevy Volt was one of the first plug-in hybrids debuting back in 2010, when most people thought electric vehicles had a very limited future. And And while the Volt never sold significant numbers and is no longer in production, leaving GM mostly out of the electric car market, the company recently showcased an all-new EV600 electric delivery van with an amazing 250-mile range through its subsidiary BrightDrop. This shows that there are many different ways to be a player in the electric vehicle market beyond competing with the Model S or Model 3, and GM continues to grow and evolve to meet the market. I don't want to disparage GM unnecessarily. BrightDrop is a way to enter the electric market, but delivery vans are nowhere near as big of a market as personal vehicles. So yes, this could be a little space that GM could get more control of, but it's not enough to beat Tesla. Number 4 point in this article is valuation. The article states, "Don't worry, I'm not going to lecture anyone on why Tesla is overvalued. Instead, I'll simply point out that Wall Street is still largely valuing GM as a boring old automaker. That is an opportunity investors may want to exploit." They are valuing GM as a boring old automaker because they have been a boring old automaker for a majority of their life. Only recently have they decided to tell everyone that we are no longer a boring old automaker, but they do not have the track record to justify their new, young, and hip image. The article states, "There's a lot under the hood beyond the mainstream operations that sells over 2.5 million vehicles annually in North America alone. The aforementioned Cruise and BrightDrop units are separately branded subsidiaries, which may give GM big potential, even if they are not as visible to traditional investors. Consider that Cruise alone, in which GM maintains a majority stake, is now valued at $30 billion. GM has an overall market cap of less than $80 billion. Yeah, all good and exciting things. I don't know how well this speaks to GM that one small part of their company is almost worth half as their whole company, but the question is it good enough? And the final point of how GM stock price could stand up to Tesla is truck margins matter. The article states, "While investors love to talk about electric cars, the business of GM is not really cars at all. In 2020, the automaker sold roughly 210,000 passenger cars in North America under the Chevrolet nameplate, including the Sonic, Camaro, Corvette, Malibu, and Impala. Its pickup truck line, consisting of the Chevy Silverado and its cousin, the GMC Sierra, sold 850,000 units last year, and not only did it sell 4 times the units, it enjoyed much better margins on its truck business thanks to higher price points." Okay, fair point. It doesn't sell that many cars, but it actually sells a lot of trucks, and they are making a lot of money on said trucks. That's all good, but this statement is basically very present and past focused. We have to look at the future. So what is the trend of their truck sales? According to GM Authority, I pulled up their combined truck sale numbers, and then I made this really quick little graph, and you can see that, yeah, they're selling over 2 million trucks a year, but look at 2020. This is one of their worst years yet, and it has been for a majority of car manufacturers except Tesla. But even before the year 2020, what has the trend been? Do we see a linear growth up? It seems to have already started to taper, and this is all before the Cybertruck has been released. The Cybertruck has been reserved roughly 200,000 times. Not everybody who reserved it is going to purchase it, but that's a good number. And even if half the people who reserved it end up purchasing, that's going to take a huge chunk off of this sales, which is already declining. People don't need to buy 2 trucks. So unless they are offering a truck as exciting as the Cybertruck or comparable, then I believe Cybertruck is going to eat a lot into these sales right now. And that's basically it. I have nothing against GM. I actually really like their vision and most of their plans of what they're doing, but they are the person announcing their plans to the world that hasn't quite started yet, versus Tesla, the person that's been keeping to themselves, grinding, having the plan, and executing on the plan for years and years and years, and now finally we're seeing the fruits of that plan come to fruition. GM is still so late to the game, so everything they're saying now sounds good, but we need to see more to see if it can actually be actualized. But let me know what you think. Do you think its stock price could really stand up to Tesla? That's not impossible, especially since Tesla has run up so much, but I still think it's highly unlikely. But please let me know what you think in the comment section below. This is Green Knight Trading, where Squires become knights. I appreciate you, and I'll see you soon.